Welcome back to the channel, everyone. Today we're diving into the fascinating world of Bitcoin and uncovering some mind-blowing facts you absolutely need to know. Whether you're a seasoned crypto investor or just starting to explore this revolutionary technology, these insights will blow your mind. We'll be covering everything from Bitcoin's mysterious origins and its incredible rise to becoming a trillion-dollar asset class, to the concept of halving and why it has such a huge impact on the price. I'll break down complex topics into easy-to-understand chunks, so even if you're completely new to crypto, you'll be able to follow along. By the end of this video, you'll have a solid understanding of what makes Bitcoin tick, why everyone's talking about it, and why it has the potential to revolutionize the financial world as we know it. So buckle up, because things are about to get interesting. Let's kick things off by traveling back in time to 2008, right in the midst of a global financial crisis. The world was reeling from the collapse of Lehman Brothers, and trust in traditional financial institutions was at an all-time low. It was in this climate of uncertainty that a mysterious figure, or perhaps a group of individuals, using the pseudonym Satoshi Nakamoto, published the Bitcoin White Paper. This revolutionary document outlined a vision for a decentralized, peer-to-peer electronic cash system that would operate independently of governments and central banks. It was a radical idea that promised to upend the established financial order. And at its core was this groundbreaking technology called blockchain. On January 3rd, 2009, the very first block of the Bitcoin blockchain, known as the Genesis block, was mined, and Bitcoin was officially born. From that moment on, the world would never be the same. In its early days, Bitcoin was mostly viewed with skepticism and dismissed as an internet fad. Its price remained relatively stable, hovering around a few cents for the first couple of years. But something incredible happened along the way. People started to realize the potential of this decentralized digital currency, and adoption slowly began to grow. As more people joined the network, Bitcoin's price started to climb. Fast forward to 2023, and Bitcoin's market cap, which is the total value of all Bitcoins in circulation, has surged past a staggering $1 trillion. That's right, trillion with a T. This meteoric rise has made Bitcoin the largest cryptocurrency in the world by market value, surpassing even some of the biggest companies on the planet. To put this into perspective, if Bitcoin were a country, its market cap would rank it among the top 15 economies in the world, somewhere between Mexico and Indonesia. That's how massive Bitcoin has become in just over a decade. One of the most intriguing aspects of Bitcoin is its limited supply, a stark contrast to the unlimited money printing we often see with fiat currencies. You see, Bitcoin was designed with a hard cap of 21 million coins. That means there will never be more than 21 million Bitcoins in existence ever. This scarcity is baked into Bitcoin's code, and it's one of the key reasons why many consider it to be a deflationary asset. Think about it like this. Gold is valuable because it's scarce. The same principle applies to Bitcoin. As demand for Bitcoin continues to rise and the supply remains capped at 21 million, basic economics tells us that the price is likely to increase over time. This limited supply is one of the fundamental principles that sets Bitcoin apart from traditional currencies and makes it a truly unique asset class. Now let's talk about another fascinating aspect of Bitcoin that directly impacts its price: the halving. Every 4 years, the reward for mining Bitcoin, which is the process by which new Bitcoins are created and added to the circulating supply, is cut in half. This event is known as the Bitcoin halving. The first Bitcoin halving occurred in 2012, reducing the block reward from 50 Bitcoins per block to 25. Then in 2016, it halved again to 12.5 Bitcoins, and in 2020, it dropped to 6.25 Bitcoins. As you can see, this halving mechanism significantly slows down the rate at which new Bitcoins are introduced into the market. Why is this such a big deal? Because it creates a supply shock. With fewer new Bitcoins entering circulation and demand remaining constant or even increasing, the price of Bitcoin tends to surge in the months leading up to and following a halving event. For years, Bitcoin and the cryptocurrency market in general were primarily driven by retail investors like you and me. However, things have changed dramatically in recent times. We have witnessed a seismic shift in sentiment as institutional investors, including hedge funds, asset management firms, and even publicly traded companies, have started to embrace Bitcoin. Major companies like Tesla, Square, and MicroStrategy have made headlines by adding billions of dollars worth of Bitcoin to their balance sheets. This institutional adoption is a major vote of confidence in Bitcoin's long-term potential and is seen by many as a sign that cryptocurrencies are here to stay. As more institutions enter the market, we can expect to see increased liquidity, more sophisticated investment products, and greater mainstream acceptance of Bitcoin. This is a truly exciting time to be involved in the world of crypto. Thanks for watching. If you found these facts about Bitcoin and the market interesting, make sure to like, subscribe, and hit the notification bell for more insightful content. See you in the next video.